But the point I'm making here is this, is if you are being told by somebody who professes to be a professional trader or has been a professional trader, all you have to do is check. And what happens if you draw a blank or you can't find it? What happens if you ask them to prove it and they can't? What's happened? You've been told by a retail trader that they are a professional trader or they have been a professional trader. So what does that mean? You're being potentially taught by somebody who is exactly the same as you. Just because you have access to a brokerage platform or a trading account with a couple of $1,000s in it, and you trade every day, it doesn't mean you're a professional trader or have been a professional trader. It's like me going out into my back garden every day and kicking a football and saying I'm a professional footballer. Barcelona are not signing me up next week, and I should not be teaching football. It's pretty straightforward. So anyone can do their research. And if you don't, you're actually being really irresponsible. All you have to do is check the regulatory history. So check for the IB agreement, check for the regulatory history. The vast, vast majority of trading educators in the market have absolutely zero professional trading experience. They are retail traders pretending to be professional traders. And it takes one check. So now you know the definition. If they have no status, no history, having a controlled function of managing other people's money, it means they've never been a professional trader, and they can't claim to have been one. It's a binary outcome. You can't get a little bit pregnant. You're either a retail trader or a professional trader. You're either pregnant or you're not. They're just pretending. So they'll have the IB agreement. They'll pretend that they're professional traders. How do they pretend that they're professional traders? Well, we live in an online world, and they'll create completely manufactured backstories of their lives. The most common one, and I like this word, it's a German word, Wunderkinder. The wonder kid. The kid that came from nowhere. And usually the lie is they turned an amount of money, like $10,000, into a big number, like over $1 million. The wonder kid turned $10,000 into $1 million. Now, why is that convenient? Because everyone can afford $10,000 to open a trading account. Most people in the Western world can just put it on their credit card. So it's the perfect bullshit story to get people to pay for education and put 10 grand in their trading account. And it's simple for people to understand. Oh, you turned 10 grand into $1 million. Fantastic. I want to do that too. Follow a few lines on a chart. The other most common one is if older guys, they'll say that they worked at hedge funds or investment banks, or that they work at a hedge fund now, or they run their own hedge funds. It's complete nonsense. If they did work at a bank, it's probably in a support function, and they'll have no control function. So they'll be working in IT or operations, or even working on the trading desk and getting the traders coffee. If they haven't been regulated to perform the function, they've been at the bank and not performed a controlled function. So it means they were in support. The hedge fund one is very disingenuous because retail traders have been picking up newspapers and watching TV for the last decade, reading all about these whiz guys in the market called hedge fund managers. And apparently, according to charlatan trading educators, all you have to do to be a hedge fund manager is open a retail brokerage account and put 5 grand in it. That's all you have to do. And you can call yourself a hedge fund manager. Wrong. A hedge fund is a very, very specific investment vehicle with very specific parameters and moving parts, very specific infrastructure. And you need 5 things to be defined as a hedge fund. You need an offshore registered fund. 80% of them are registered in Cayman Islands. You need an onshore management company, so that's usually in New York, London, Geneva, Singapore, Hong Kong, Sydney. The offshore fund, you have two charges. You have the management fee, so the offshore fund is charged by the management company a fee to run the assets per year. And then you have a performance fee. So it's usually 1 or 2% management fee, 20% performance. You have a third-party administrator. So what they're doing every day is making sure that the management company is implementing the agreed mandate from the offshore fund for the strategy that investors have invested in. You need a prime brokerage agreement with a top 10 investment bank. No investment bank will look at you unless you've got $30 million commitment up front. Total waste of their time. Investment banks want clients. They want big clients who are going to trade. And you need a seriously strong track record. Minimum 3 years, probably 5 years. And as you've seen, hedge funds are a very specific investment vehicle. How much does it cost to set up a hedge fund structure? Over $1 million. If you don't need it, you don't do it. It's stupid. It's vanity over sanity. So we saw manufactured backstories. IB agreement, regulatory history, manufactured backstories. What about manufactured trades and deception? You'll see this a lot in the online world. You'll see lots of educators active on social media, posting screenshots of charts. And this is essentially hindsight trading. So for example, posting a picture of a chart on social media with an arrow that points here and an arrow that points there, saying, I bought it here, I sold it here. Congratulations. Well, anyone can do that. Anyone can pull up a chart and say, I should have bought it at 5 and I should have sold it at 8. It's just bullshit. So that's hindsight trading. What about predicted trading? Predicted trading is very disingenuous because people who don't understand the industry can fall for it very easily. So what about posting a chart before an event with support and resistance and saying, prepare for the big move. And then afterwards, you actually get a screenshot of a real trading account showing a profit of, say, $3,248 with a narrative next to it that says, just made $3,248, it's only 10 a.m. That's me done for the day. I'm off to the beach. This quite literally is the oldest trick in the book, and it's been going on since the 1920s. They've got 2 trading accounts. They go long in one and short in the other, and they post a screenshot of the one that makes money. And it's the oldest trick in the book because it actually comes from brokers. Because in the old days, brokers were advisory brokers. They would advise their clients what to go long and what to go short in the market. And if you've got 100 clients and you're an advisory broker, and this is going all the way back to the 20s, do you tell all your clients, your 100 clients, if you have an idea to go long? Do you tell all of them to go long? Of course not. You want to grow your business to 200 people. So you tell 50 to go long, 50 to go short. 50 of them make money, 50 of them lose money. And then the guys that lose money, you help them on the next one. And you grow your accounts from 100 to 110, 130, 200. It's the oldest trick in the book. All that's happened is it's just become modernized by the educator who is the broker in disguise. That's all it is. And this is why basically any professional trader with any respect for their career will never post their trades. Because they will lose all of their gravitas, all of their respect in the professional trading community, because every professional trader knows that they're probably bullshitting, because they know all the dirty tricks. So there's a side of the industry that's totally opposite to everything that you experience as a retail trader. But it also breeds a dependency culture as well, which is exactly the opposite of the way traders are taught in the real world, like professional traders. So people signing up, for example, to hot stock lists. Here's the top 5 stocks today. Here's the stocks in play. Here's the potential news. Get long, get short, get long, get short. What's happening there? That's the educator pushing the inversion narrative because they're working for the broker indirectly. And what are you doing? You're depending on those lists or those ideas every day to try and generate a P&L for yourself. Try and generate a profit for yourself. It's the total opposite of the way you need to be taught. You need to be coming up with your own ideas and generating your own ideas. Manufactured trades and deception again. Deception, this is how the online world works with people who have a false narrative. They know everything they say is bullshit, but they have to give the impression that other people believe it. So you get sucked in. So there's two things you need to watch out for: sock puppets and meat puppets. What's a sock puppet? Well, put a sock on your hand and speak. You open 400 social media accounts, different email addresses, different names. What do? You pretend to be people commenting on all of your posts, and you're logging in to 80 of them per day and making the comments. There's a huge amount online of complete nonsense, and people get sucked in by it. What's a meat puppet? A meat puppet is a sock puppet, but it's a human. They're hiring someone in Bangladesh, China, India, wherever, Russia, to log into the accounts and do it for them. And they'll upvote all their comments to get them to the top. So it looks like there's a narrative occurring that believes they're bullshit. So then people get sucked in. They build fake websites, so they'll comment on other business people and then comment on themselves. That's a sock puppet fake website. Fake reviews, and they'll give reviews on themselves, obviously that are favorable, and then reviews on their competitors that are not favorable. So this is how they all do it. Or they can literally engage in actual criminal activity, which is creating equity curves of trades that they claim they've done going back in time, which shows them making money over time. And all they've done is gone into a spreadsheet or the back end of a website and typed in buy at $5, sell at $5.65, and it just updates their equity curve. And it's not audited by third parties. It's not audited by accountancy companies. They don't have administrators. It's self-administered, and it's actually criminal activity. Because what you're actually doing is you're mis-selling financial performance. Lifestyle and social media posts. This is the stuff that's designed to distract you. So drastically overemphasizing the conflation between trading and lifestyle. So of course, if you know what you're doing, it doesn't matter where you press the button. It's less than 1% of what you'll do as a trader. It's the other 99% that's important. You can't be sitting by a pool coming up with 10 really good trading ideas per week. You actually do need to work. You can press the button when you're lying by the swimming pool, but you have to do the other 99% of the work. And you can always tell an educator that's had no trading experience because they'll constantly push the lifestyle narrative. It's creating the hopes and dreams. And how do they do it? Most typical ways: renting houses on Airbnb and doing MTV crib-style tours of their houses. But they'll literally rent the house for a day, and they don't own it. It's rented for a day. Or they'll rent a supercar for a day. And in the house and in the car, they'll film all day and collect 3 months of content and drip it out over 3 months. So they build archives of content to drip out the inversion narrative.